All right, we're going to start off with the euro dollar. This was the last trade that I had in the New York session. It was a sell signal continuation breakout trade. I'm looking at the 30-minute time frame because it really started with the London session back up here with that Tech 1 trade. And again, this was a very different pattern than what we saw with the pound dollar. I'll go to the pound dollar. Pound dollar, there was a couple of different opportunities in here throughout the New York session, and I had said that it's just not setting up the same way that the euro dollar did, and I didn't expect that it was going to take out anything. I didn't think it was going to be the start of any kind of move. And that's in fact what it did. It sort of went sideways and flat. This is the pound dollar 1 hour time frame. So if we go back to the euro dollar, we had this move here, which also affected the euro yen. I'll show you that quickly. So this will act as sort of a recap for those who were not in the chat room. And this trade hit the target here at 20 and then ended up closing. I'll go to the 1 hour chart below that support low. This is the support low that I was looking at all last week and the week and this week. So we had the last half of last week where it set in this consolidation range here, and then everything just went sideways. So I've been talking about this for about 5 trading days, and then it finally broke out. So very often we see Tech 1 trades that set up and pay, and then later on they eventually break out to the downside or to the upside, depending, whatever direction we're trading it in, and it'll set up a continuation breakout trade. So this one here, if we go to that signal candle, there's a lot of stuff in there, isn't there? Sorry about that. I'll move some of this. These text boxes sort of float around. I haven't been able to figure out how to make them stick in one spot. But anyway, so here's the signal candle. So we're going to go to the signal candle. We have Bollinger Band separation, a little bit of divergence here in the CCI, and that sort of correlated with what we saw with the dollar index, because the dollar index did something very similar. The dollar went up to resistance, bounced, pulled back, and then 2 candles later closed above resistance. And it created this little hook in the dollar CCI on the dollar chart. So it looked like, a little bit of divergence. It's okay. Again, no divergence in the MACD histogram, so we had 2 out of 3, and that qualifies. We had an entry at 2. The first target, scaling out at 20 pips, was here at 82. Now, some chat room members did hit or saw approximately 82 when they closed the trade. So they banked and locked in profits. This particular platform only went as low as 84. So I had another platform on another computer in my office that went about maybe a few tenths away from that target, which would have qualified and I would have closed it. But on this particular chart, it did not hit the 82. For some members in the chat room, it did hit 82.9, and they were able to close the trade as it went through 83. So this was a winning trade for some people, and for others, it depends on what your broker fed you and what you saw. Again, this broker, Forex.com, only went as low as 84. So there were other brokers that went a little bit lower, and they saw that, and they closed and locked in the trade. I know that because that's what everybody typed in the chat room. Not everybody, but those who did close it. They typed in the chat room that they locked in the first half of the profits. Now, at that point, we set it at a break-even stop. So they would have been stopped out anyway once it moved back up to the entry, right, with that break-even stop. So they would have locked in and banked anywhere from 15 to 20 pips on the first target. And that's okay. At this point, they would be done and out of the trade. But one of the things that I was indicating and talking about is, first of all, the levels that would need to be breached to indicate a possible canceled continuation breakout trade is all the way back up here where this arrow is. This arrow is not only the start where the Tech 1 trade on the 30-minute chart began, but it's also the price swing high that created this move to the downside where price eventually closed below that support. That's how I calculate whether or not a continuation breakout trade should be closed. I'm going to get rid of this support level here at 96. I'll show you what that was in a moment. So originally this is what it looked like. It looked just like this. We had support. We get a closed candle below support, printing the continuation breakout trade. We know where our 3 pip entry is. We know where our first target is. And we know where our final target is down here at 843. This retracement that we're watching right now is normal. It didn't go that deep. From an entry of 2 to about a high of just under 15, that went to 14.5. That's not much of a retracement. It may go further. It might. But right now, with the data that I have, all it looks like is that price is retesting the level that it broke out of. And we see that happen all of the time. It's a healthy structure. It's healthy price structure. When it does something like this and it breaks out, pulls back, tests the level that it broke out of, and then continues, that is more confirmation that the trend's likely to continue in the direction of the breakout that we were trading anyway. Usually I try to avoid sitting in the breakout. So we closed this trade. Some closed with a profit. Others closed with maybe a pip. Because I mentioned if you didn't take profits, we're just going to close this at a break-even stop. Some people reported that they locked in 1 pip. Some people reported that they locked in 2 pips. Other people reported that they locked in anywhere from 15 to 20 pips because they did see approximately 82 on their platform. Either way, we're flat because those, again, who locked in profits at that first target still got stopped out on the second half of the trade at 0 with the pullback at the break-even stop. Now, one of the other reasons why I said it wouldn't be a bad idea to close this trade out with a pip or 2 or at break-even, even though it hasn't really done anything. It hasn't hit the stop, and it really hasn't gone down through the first target towards the second target. It really is still a trade in play. But the conditions and the environment, that's also part of the equation here with getting into a trade. It's not just a technical trade, right? We're getting in technically with the confirmation and the signals and the information that we have why price is driving. But we need to calculate what is it that's causing the market to react like this? What is it that traders are waiting for? What is it that traders are looking at or expecting? We know ECB is tomorrow. ECB, for the most part, is what caused a lot of this consolidation here for most of the week. Then we got this little breakout with some commentary about ECB and a few other things economically, right, for the Eurozone. And then we had this retracement. That's all that it looks like at this point. It is still possible, and I'm not calling out a trade right now. I wouldn't do that. But it's possible that price will go sideways through the London and into the New York session as we approach the New York session when we get the ECB rate decision. So there's the rate statement, there's the statement, and then 45 minutes later, there's the press conference. And very often he'll answer questions, and it's either in the statement or sometimes the answers to some of those questions that he receives that could move price and move it dramatically. I've been doing this for many years, and I see a lot of these Fed officials or bank officials move price on these interest rate days. We've traded FOMC and made a lot of money on breakouts. We've traded ECB and made a lot of money on breakouts. This is a breakout, and it really hasn't stopped out, and it hasn't hit the target. So if price holds here and continues to hold here through right up leading into the interest rate statement and then the press conference, the press conference is probably going to be, well, I'm just guessing, right? At this point, I don't know. I'm just saying that the press conference is probably going to be where we see some follow through, but I can't really say. Anyway, if it holds here and whatever happens with ECB tomorrow, if it drives price back down through the 2, it's possible that this could end up being, that news event could end up being the catalyst for price to move back down here in this continuation breakout trade to work out and reach that final target down there at 43. It's just a possibility. I don't know how we're going to trade it. I don't know what it's going to look like during the London session. If it pops up any higher, I would probably be a little more suspicious of it. But I don't usually cancel these continuation breakout trades until price takes out the high of the price swing that created the breakout, which is all the way back up here above the stop loss anyway. If price tags that level up here, then I would cancel the possibility. Even if ECB causes price to drop, I would think it's not likely to go all the way down there to 43. I could be wrong, right? Sometimes we get a 200-point move with ECB. It's happened in the past. It's possible. Sometimes it happens with non-farm payrolls. Anything is possible with these big events. So we got to trade carefully. But that was the reason that I said if it pulls back significantly, if it pulls back to the break-even stop, let's just go ahead and close this trade out with 1 or 2 pips or even 15 or 20 pips, depending on, which side you were on this morning with all the traders in the chat room. There, again, some of them did see close to 83 or 82 as it moved through 83. So they locked in profits, and others saw what I saw, which was about 84. So then they closed with a pip or 2. The reason, again, is that if it pulls back and it goes sideways, I don't want to hold on to a trade for 24 hours and have my money in the markets tied up where it's a higher risk to comments, statements, rumors, tweets, things that we see that cause a 180-degree reversal that only lasts just a few moments, and that's sharp enough to stop me out. There's just no reason for me to do something like that. This is that type of trading environment where we see the market reacting that way. And what I try to do is pick a point in time during a specific trading session that has more market volume, more participation at that time. I would expect from the time I get into the trade that it's more likely to reach its target. Today, it just sort of stalled. It really didn't go very far, but the move really started back with the London session. So this trade paid during the London session, and it paid a pip or two for some and 15 to 20 pips for others in the chat room here on the euro dollar with that breakout. And I mentioned the other trade was here on the, this is not the reversal chart. See reversal chart. This was the euro yen that followed along with the euro dollar today. And earlier in the week and last week, we had pound dollar trades that we were able to trade the pound yen. So we were getting that. It sort of went sideways and flat with the pound dollar today and a little more activity with the euro. Not surprising, but giving us the opportunity to trade this reversal here. So when I trade reversals, I'm using these indicators here. This was actually pulled up when we were identifying that reversal. You want to see more of the pattern and the structure here with this bandwidth to be able to confirm when it's identifying a possible top or where this leg of this uptrend is over with. Not necessarily a complete reversal. You've got to look for other signs and other clues for a possible reversal at that point, but it at least warns you. And again, that's why I dragged this thing up. This is a 30-minute chart on the euro yen. So this was a reversal candle with an entry of 119.05. I called this out during the London session. The first target was 80. These are normal psychological level targets that I trade to all of the time. The 00 was just a few pips below that. It would not have made any sense. It wasn't anything that would have made a difference. The 00 was not, it's normally a trade or a level that I would trade to, but not when it's this close, not getting in at 5. So the first target was 80, the second target was 50. And for the most part, it didn't really go a whole lot lower. I mean, it may have even hit 20. 20 would have been the next level. It only went as low as 28. But I didn't think it was going to go much lower than that anyway, and that's where we stopped. That was my last final target here. So this one paid quite a bit, from 5 to 55. I'm sorry, 5 here, 50 on the opposite side of that 00. That was a relatively good trade. I mean, that was it didn't take that long. This is a 30-minute chart. So all of these indicators confirm that possible reversal. Again, that all set up with the euro dollar this morning with the Tech 1 trade back up here, which led into the continuation breakout trade later. So right now, again, going back to the 1 hour time frame and the breakouts, I'm still looking at this euro dollar thinking there is the possibility this could drop with ECB and hit these targets. But if it doesn't, I'm okay, right? I'm flat. I'm not in this trade anyway. And if it pulls back up, I don't know that I'll trade it back up because I don't know where it's going to stop. So I may avoid trading the euro dollar until after ECB statement and press conference. Now, the other pair here, we've been talking about this all morning and for the last couple of days, and both sessions yesterday for Wednesday. It's inside. It's in this tight range of consolidation. I mean, it's appropriate. It's 83 here on the high, 5 on the low side, so it's appropriate. If a 1 hour candle closes outside of that range, I might consider a continuation breakout trade. I don't have one yet, and I don't know when I'm going to have one. And I don't know if it's going to go sideways leading into ECB as well. Maybe it'll just sort of trail along with whatever reaction we see after ECB. That's a possibility. I really don't know. So I'll be watching this during the London and New York session, but I didn't trade this today, meaning both sessions. Now, the other trade that I want to go back to here is the dollar yen. I've been saying for the last few weeks that I expect more yen weakness on the dollar yen, and we keep seeing it. It just keeps going and going and going. You can see some of the price targets there from the other day. It hit yesterday. That was about a 24-hour trade. And then just in the last couple of hours, it printed another breakout to the upside. We're not in the chat room at this time, so I can't call that trade out. And this is happening during the Asian session. And I mentioned that sometimes I do get continuation breakout trades or decent moves during the Asian session. It just moves in cycles. Sometimes I do, sometimes I don't. And right now we're still seeing more yen weakness. It just keeps driving higher. I mentioned a few days ago and with the weekend update that one of my price targets on the daily time frame, the first target is the 108.00 level. Well, price right now is sitting here at 108.02. The next target is 110.00. I'll take you to that chart now. If you watch the weekend update video and last week's video, you'll remember this chart. So here we have the dollar yen 1 hour daily time frame. We have a new A low, a B high, a 382 retracement. Based on the depth of this retracement, it took out the B high, gave us the 25 entry on Monday night going into Tuesday. The first target is the 108. I dropped it here at 99. Sorry about that. I don't think I was able to. There it is. So the 108 was my first target. That is the extension target using this Fibonacci tool. And when I get a chance in a situation like this where I can use the Fibonacci tool correctly and then correctly identify my take profit levels as extension targets based with the Fibonacci. So these are Fibonacci extension targets, and then these are Fibonacci retracement levels. And when I get a good opportunity to use the tool correctly and find the extension targets, these will override trading to, let's say, the 00 or the 20 or the 50 or the 80 psychological levels. Usually when I use those psychological levels, I'm trading off of the 1 hour time frame. When I'm trading off of the daily time frame and I'm looking for bigger trades, I'm going to be looking for extension targets when I can appropriately use the Fibonacci tool and identify the right A high and B low to confirm the depth of the retracement. The depth of the retracement tells me which target I could expect to use. Let me tighten this up. So here we're sitting at the first target. So again, over the weekend, we talked about this before it even broke out above the 107.25 entry, which was the 3-pip entry. That was the continuation breakout trade signal candle from last Thursday. So we've been aware of this breakout to the upside and realizing that it's probably going to continue higher, expecting these targets since last Thursday. We just needed the follow through on Monday as it took off Monday evening, and then Tuesday, Wednesday, and now we're headed into Thursday. So here's the first target. It has reached the first target based on this daily time frame and this data here. The second target is the 110 level or the 110 area. That actual resistance or target is about the 110.28. It's not a precise number. You know, I trade it to areas, right? So I would look at the 110.00 or the 110.20 area, but I would be watching this on the 1 hour time frame to gauge where it's likely to stop, and then using the reversal template to identify the top and where that move is about to end at that point once it reaches the 110.20 or 110 area. That way I know I'm not holding on to the trade too long. So again, I'm not calling the trade right now. I still think that if you get in now, you're chasing the trade, and I don't recommend chasing the trade. I would wait for maybe some kind of a pullback, and that's another thing. Even though we're looking at a price target of 110 area, the 110 area, it could reach that area in the next 3, 4, 5 days. It's possible. It could also reach it in 2 days. The other possibility is that it's going to take a while, and that it could move up a little bit more and then pull back, retest the level that it broke out of again, and then bounce again. These are all possibilities before it even reaches the 110. So again, be careful. I'm not calling a trade if you're not in it. Be careful. I would recommend going down to a 30-minute and a 1 hour chart and then looking for the breakouts, which is what occurred here just a couple of hours ago. Another continuation breakout trade. So this is putting us in the trade. It's just I'm not in the chat room right now, and I don't open the chat room during the Asian session. So it is here. It is moving, but I can't call out this trade. I will look for an opportunity. If it tops out here and then maybe it drops, maybe during the London or New York session, maybe I'll get an opportunity to sell it if this is as high as it goes for a while. It has reached the first target. When it reaches the first target, usually with these extension targets, I expect some kind of a either pullback, not necessarily a significant one, or maybe just a little more sideways activity for a little while before it finds either some kind of a support or resumes that uptrend. So there's a few things to be aware of. It is at its first target. I would lock in profits at this point and then wait. I would wait for another opportunity. Even though we got this continuation breakout trade, I don't know how much further it's going to go at this point because it is running right into that resistance area. It may stall here for a little while. So again, if it shows signs that it's topped out temporarily and that we get an opportunity to sell it for the day, I'll know that then, but I can't call it out right now. Again, I'm not in the chat room. So I'm going to go back to the breakout page. And I'm going to go back to So I'm waiting here for an opportunity to trade the dollar yen, but it is still moving in the way we expected it to. Look at those yen futures. You remember with these updates throughout each session, and also with the update videos that I post in the private Facebook group, I post them in the YouTube channel, I post them in the membership area, I post them everywhere. I send them out through email. I'm always going back to, or just about in every video, I'm going back to that Japanese yen futures chart. You see volume, you see where it starts to weaken at that point or accelerate, whatever the case is, and it helps to also confirm those tops looking at volume while watching the Japanese yen futures. But we see all of that. I mean, everything's just confirmed for the last 2 weeks. I got to say, this one was this dollar yen trade. It was such a perfect opportunity that it was almost too easy to identify where it was likely to go, at least to that first target. I mean, the whole breakout, the whole thing was just too perfect. Even going back to my description a couple of weeks ago when I was looking at the weekly chart. The weekly chart, this is the weekly candle. It was bouncing right off of that March 18th, 2018 low. March 18th, it was the week of March 18th, 2018 that printed this low here. And then a few weeks ago, it bounced right off of that support and then printed that bullish engulfing, not necessarily an engulfing candle, I'm sorry, a bullish candle that closed more than 60% of the length of that last bearish candle, which gave me a prime choice Tech 1 trade. Indicators confirming, everything was confirming, and then we got to the 1 hour chart, I'm sorry, the daily chart, where it finally broke above that resistance, printing the continuation breakout trade, and then giving us the 3 pip entry on Monday, Tuesday, and Wednesday, and then hitting the target. It was just, this was just a classic, perfect breakout and the whole setup with all time frames confirming. You know, everything was just bringing it all together on each one of these time frames, so it was really easy. They're not always that easy, and I don't mean any disrespect. If you can't see it right now the way I see it, there's nothing wrong with that. This is just the way that I do it, and I've been doing it like this and looking at the charts in this manner with this structure and the tools that I use for the last 18 plus years. If you want to learn how to do it, you could join the chat room. If you're not in the chat room, I'll show you how I do it. After a while, you watch me do it, and you get the hang of it. I mean, you start to see exactly what it is that I'm doing, and it starts to make sense to you. So I'm going to go ahead and stop here. I don't think I'm going to get really any signals until either the London or closer to ECB, and then I'll do another update about this time tomorrow.